Frontier opening bell Friday, the 23rd of October. I am Bosin Omofayo. We thank you, our panelists, for coming on the show today. Onyeka Ijema from Vertebra Capital Management. Good morning. Oreoluwa Odetunde is in charge of macroeconomic analysis at Greenwich Merchant Bank. Uche Namen is the managing partner at Blue FX Nigeria and Alikan Sachu in Nairobi from Rich Frontiers Management. Good morning, ladies and gentlemen. Thank you very much. Let's hit the ground running for today. Let's start from just a quick rundown of the Pan-African market yesterday. And we're just not going to waste time with this. Nigerian market came back 0.4%, 0.19%, about 2/10 for the Ivorian market. Egyptian market sank 1.03%. Kenya managed 0.67 in the green, and South Africa GSC down about 1%. We have quite a whole lot to talk about this morning, so let's get a bit of global perspectives where we are right now. Give us a minute to look at the East African market. The payments company Cellulant is speaking new Faith Gitonga as a new country manager, and Tuskys seem to have gotten a safety net from the court barring creditors from auctioning the company's property. Mutual funds assets in Kenya 15% up in second quarter, backward-looking data, but what does it mean in terms of going forward? The Bank of Uganda kept policy rate unchanged at 7%. This morning we got our Airtel Africa numbers for the first half of the year period ended September. Looking really good in terms of growth in Nigeria, about 20%, East Africa about 21%, and Francophone Africa number also very positive within the period ended September, reported by these one of the biggest telcos on the continent. Uchenna, give us about a minute right now. In terms of the global space, where are we right now with the debate last night? Trump and Biden, the coronavirus looks to still getting the best of everyone's side. Is remdesivir or whatever therapy the virus we need, or sorry, the vaccine we need for the virus?
I would say yes and no. I think right now what is happening with coronavirus and vaccine production is more like remdesivir is basically an antiviral drug for hospitalization cases. So it's not it's not a prevention, should I say, medication or treatment. It is more like a treatment, in itself when you are infected and hospitalized. However, we are starting to see biomedical, should I say, companies putting out some sort of result on vaccine tests. There is a sort of a positive news earlier this week whereby there is proof that antibodies actually can prevent coronavirus in itself, and that are sort of giving the market some sort of, should I say, optimistic, should I say, view. But I think where the market is right now, market participants, is that there is now a shift in terms of what the focus is in terms of the risk in the market space. The coronavirus infection cases, we talk about it, but not really the focus at the moment. We're just looking at the US election and looking at the volatility that comes with that into that space, the US dollar on the back of that. So those things basically right now, the November US election is sort of shifting the market, because if market participants pricing Joe Biden, it sort of changes the whole, should I say, physical and monetary landscape, given the policies that Joe Biden has put in place or have campaigned with. And that just takes most of what Donald Trump has already set in place and what he wants to do is following them. So I think that is what is key, and that's what is shaping the market right now going into the November election.
Interesting. Thank you, teeing off the show for us today. Ali, give us the East African coast story. Tuskys, this looks like one last line saving this retailer.
Yes, so just to start off with, we had the highest number of COVID cases yesterday. We were over 1,000 here in Kenya. The test positivity rate is around 14%. We're doing very small sample sizes, largest number we've seen in the entire period. So there's been a bit of alarm, frankly, about this. Hospitals are supposedly full, and the government's asking for hotel space as we speak. So the question is, what's happening there, and we need to be aware of that. Tuskys, as you said, and we discussed, I think, yesterday, has been on the ropes, but you know, the court has ordered creditors, has barred them from auctioning Tuskys' assets. But this is an endgame reprieve, Bison. You know, when the court is stepping in and blocking creditors from getting at your assets, you know, the game is close to being up, frankly. And I think unless we see money come in the next 4 weeks, it will be over. I mean, the shops are empty. It's very difficult to say what exactly the point of it is unless the money comes in. Money market funds, assets up 15%, 88.1 billion. That's a good sign. Bank of Uganda keeping policy rate unchanged at 7%, but struck a very cautious note in the accompanying commentary, where they cited significant weakness in the economy, and it was quite it's worth reading. But they were pretty bearish on the economic situation, notwithstanding of the fact that Uganda, frankly, is an agricultural powerhouse, and this, for me, gives them a degree of stability in the current environment, which I think the Bank of Uganda downplayed.
Okay, we'll get back to you, Ali, on one or two other stories. Quite a whole lot to chew within the Southern African space this morning. Let's quickly touch on Nigeria and West Africa, where of course, the protests and the violence hitting that has seemed to be overtaking any concerns about the virus as we speak. Africa, according to the latest IMF report released yesterday, regional economic outlook looks to a sluggish growth of 3.1% next year against 5.2% for the rest of the world. Nigeria's inflow to the INE window up 61.7% because of $434.6 million central bank interventions. Congo is raising 300 billion CFA franc to settle local debts and all of that. And Nigerian breweries, of course, the country's largest brewer, is floating series 9 and 10 of 20 billion of his commercial papers. Let me ask Odetunde about the outlook in terms of our macros for Africa. When you look at the latest IMF report, growth for 3.1%, 2% for the rest of the world. What are your concerns? Where do you think this fourth line is really for Africa?
Thank you for the question, Boston. So for growth in Africa, we're still seeing that there's still going to be a spillover effect of, the coronavirus from, advanced economies into, these African economies. I mean, they've been already distorted by what's been happening so far. External financing has been quite low, monetary conditions to some of them have tried to stay accommodative, but at the same time, I think the committee mentioned that there was a need to keep financial stability and also achieve and support growth on one end. So we're seeing countries like Botswana, we're seeing countries like Nigeria, lowering their interest rates, to support economic growth. But I think a major thing that we're seeing across these African economies is that there's still that level of development that still remains quite low. We'd be looking at the kind of sectors that that they look towards for growth. Agriculture, which is still backwards. For some of them, oil also for countries like Nigeria, for countries like Angola. Which immediately looks to this as their mainstay. But I think the committee did mention that there was a need to look at other forms of growth, transformation policies. There was a need to look at the fintech space, digitalization, those kind of economies, those kind of sectors, those kind of pro-growth policies are expected to spur growth, rather than other forms of growth that we are more majorly accustomed to in Africa. So we're expecting that, yes, growth will significantly slow for a lot of these economies. I mean, Nigeria is expected to grow about 1.7% in 2021, and the committee did mention that they are not going to be expecting growth back to pre-pandemic levels 2023, 2024. So that's still a far cry, compared to what we've seen. So, we think that, some of these policies, some of these things might be in place for economies like Kenya. We're quite bullish about Kenya. I think Kenya's broadband penetration is about 70%. I think fintech space, they can really have a go at a country like that. If we're looking at the fact that the economy to, introduce the lending cap, I think sometime in November 2019, and that lending cap allows them the opportunity not to increase rates to very unsustainable levels. And we've seen that a lot of their banks have been able to loan to other riskier sectors, like the SMEs and others like that. So we think that, those kind of economies, we expect to see, more positive growth compared to economies like Nigeria, where we're still struggling with, oil prices. We're still struggling with domestic demand, which remains relatively low.
Okay. Onyenka Ejoma, thank you so much, Odetunde. But again, Onyenka, if we look at this week, I'm sure the protests and the violence and the president's speech and all of that seems to have outweighed anybody's concern or news, even about the virus. That we've seen cases rising in the US, in the UK, and elsewhere, even as in Kenya, as Ali said earlier.
Yes, you're definitely right. I mean, that has been the major, that has been the major story. Those have been the major headlines this past week. We've seen the protests largely disrupt some economic activity in key economic cities like Lagos, Abuja, Port Harcourt, and the likes. And we've seen violence erupt, due to some questionable decisions taken at different sides of the aisle. And we've seen that impact general economic activity. We've seen the curfew imposed in Lagos and in many other states now, just to help contain the pandemonium that has ensued. And yesterday the president came out to address the nation, and he touched on a number of things. That said, it doesn't seem the response, at least on social media, has not been very positive to the president's speech. So it doesn't seem like a lot has changed so far in terms of the impacts on general economic assets in the country. We've seen destruction of public property, small businesses, goods and services. It's going to be a field. I would have said it would be a field day, but it's probably going to be a field quarter for the economy, for the insurance companies, who will have to probably pay out a lot of claims. Investors are watching this. Investors are keeping tabs, and they are rightfully worried, They're keeping tabs on it. We saw the market go down 2 days ago, like 0.75%. Investors are still, and they are right to watch to see what's going to happen.
Thank you. Uchenna, what's your take on the developments in Nigeria so far? Is there anything we've seen across the currency trading place?
Yeah, I think I'll just reiterate from, I can't remember his name, apologies, from the last speaker there, is that the current situation have made matters worse, right? We were in a place whereby we're looking for a sort of encouraging, positive, optimistic sentiment from foreign investors, and right now it's sort of makeshift or brewing civil unrest. It's creating the sort of aura that might be the case going into the economic as related to the economic and business activities in the country. Now you're getting foreign investors looking at the possibility of coming into the country. They're now taking a step back to say, now this is a bigger problem, right? We've had majority of the year whereby we We have FRs trying to say, well, we don't understand what oil prices is doing. Coronavirus, it is the exchange rate. That pressure in itself has affected the whole macro scheme in the country. And now we're looking at maybe things coming back to status quo, and we are having a possible civil unrest. We're seeing the military crackdown on peaceful protesters. That and I'm not even just talking about investment now. From a fundamental rights perspective, investors don't want to be in a space whereby they're sort of putting money in a government whereby they don't have regard for the citizens. So you're looking at this play from different angles, and that is not helping our case at the moment. I know the central bank will be extremely worried given their plans to sort of curtail the pressure on the exchange rate, and now we're looking at the possibility of sending those things out there or keeping them at bay. So it's not looking good for us. As he rightly mentioned, the last speaker, towards the quarter is not going to, it's not looking really bleak for us, we would have hoped. And I think on the back of that, we might see some further pressure on our currency, also.
Thank you, Uchenna Minis. Let's touch on Southern Africa very quickly and look at some of the stories around Botswana, asking the World Bank or knocking on the doors of the World Bank for support to plug its budget deficit. Of course, we all know diamond sales had been very lackluster this year, even though diamonds last forever. Anglo-American says it's post 24% increase in production in Q2, but Zambia's S&P cut the countries to default over the missed eurobond payment. We spoke about this. It continues to grab the headlines. South Africa's third quarter rebound may not be enough to trim the country's budget deficit. That's according to a poll reported by bonnyweb.co.za. And Zimbabwe seems to have found the vaccine for the country's weak currency, the latest Zim dollar, now gaining back-to-back on the stability and all the efforts by the central bank. And Goldman Sachs is predicting a commodities bull run in 2021, citing inflation fears, a whole lot of other things, and the stimulus from the US and the EU. Goldman Sachs is very bullish on commodities outside oil, crude oil, that is, in 2021. Ali?
Yes. So there are lots of stories there. Let me just start with Botswana tapping the World Bank. Botswana is probably respected as one of the best macroeconomic managers of their economy. The World Bank will give them an open check. It's inevitable. Of course, there has been a significant downturn in their main commodity, which is diamonds. But they've got years and years of track record, which they can count on, and the multilaterals will support them as is required. S&P cutting Zambia to default over missed eurobond payment. This is ahead of the 30-day grace period, so it's quite a call from S&P, who normally, like most ratings agencies, tend to act after the horse has long bolted. This is the first time I can remember where they're ahead of it. But what was interesting was a little report I picked up on that the IMF is sending a new representative to Lusaka. And that might signal a rapprochement between the IMF and the authorities in Lusaka, which I think people will be watching keenly. Zimbabwe, as we said, after an almighty crash, the currency has stabilized for the last few weeks. Mithuli Cube is talking up the economy. And if you take his numbers, it could be the fastest growing economy in the world next year. Obviously, we're rebounding off a bombed out base, and that's helping. But any news is good news. And Zimbabwe, again, is a strong agricultural economy. And if they get the right rains, they were worried about the El Nino weather effect, which tends to dry out East Africa. And South Africa, third quarter rebound, look, it's been very anemic so far. They need a lot more growth to get things going.
So, Oreluwa, let me ask you, when you look at budgetary support, like Botswana is asking the World Bank, Nigeria's been asking the World Bank since around March, April. To date, we haven't heard a word from Washington. The annual meetings is ending this week, and there's no word yet as to whether we'll get this $1.5 billion support. Do you think the window is closing on Nigeria?
We could say that. I mean, this doesn't bode well for the economy in any way, based on the fact that we're not even seeing, that FX supply that we used to see, from FPIs. Current accounts is in the deep deficit, and remittances flow are also quite low. So I mean, the CBN doesn't have so much to fall back on. I mean, we're still seeing that some of these unsustainable policies, like what it has been able to do, seizing some of these interventions in the FX market, trying to accrete FX, the little FX flows we're getting into reserves. These are very unsustainable policies, because we're seeing that this structural there's a real if you look at the structural economy, I mean, we're looking at the real sector of itself is really quite low, and we're also going to be looking at the fact that all prices are still relatively low. So this doesn't bode well for the economy at all. This doesn't bode well for the economy at all. We still think that some of these artificial fixes that we're seeing might still continue, so as not to distort the foreign reserves, but we still expect that to still remain unsustainable at the levels. I mean, it's at 35.67 last time we checked. Yes, so we still expect to see that level of volatility in it. I mean, if you also look at the fact that our export baskets are still largely based on commodities, if we do not see an improvement in that aspect, we do not also see significant accretion to our foreign reserves.
Okay, well, let's hope we'll get positive response from the World Bank on Nigeria's budgetary support. The window, yes. The latest situation in the country is not going to help the decision at the executive board of the World Bank, isn't it, Oyeka?
Yes, definitely. The World Bank, like the rest of the world, is clearly watching developments unfold in Nigeria, and while there's the argument as to the investing on a moral basis, or investing to recoup returns for multilateral institutions and development finance institutions. Clearly, they are not a charity, and nobody wants to pour money down the drain. It seems like these developments in the country throw aspersions as to how productive any money pumped into Nigeria at the moment will be. And even prior to that, the World Bank had been adamant, that Nigeria needed to do a lot more in terms of reforms, in terms of policy reforms, and FX reforms, before they would disburse these funds. Now we've thrown in, like now there's a new thing in the mix, and I'm sure that the World Bank will be watching these developments also in addition to the previous things.
Okay, quick one. Uchenna, Goldman Sachs is very positive that there will be commodities bull run in 2021, and that of course does not include a crude oil, by the way. That is on one side. Russia this morning was saying, look, it looks like a supply cuts is likely in the horizon. Where do you see any likelihood of a push for oil prices strongly above the current $40 handle that is being rallying around 40, 41, 42, go back and come back? Or do you think we're locked in this cycle to the end of the year?
I think when it comes to oil, I think as much as we want to maybe highlight that they are in control, I think they've gotten to the peak of their control when it comes to supply. What people get to forget is that when we're dealing with oil prices, there are actually two variables, supply and demand. What OPEC can do is they can hold on that supply variable, try to tweak it with their production force, manage it. But when the demand is as lackluster as what we've gotten this year, it is a big pressure on them. So I think where it is right now is the hope that economic and business activities not get to exactly pre-COVID level, but near pre-COVID level. Like there is the upward bullish trend in that regard when it comes to the demand, and I think that's what OPEC is banking on. And the reality of production costs too. You know, when you tell people like Nigeria, Kazakhstan, and Iraq to cut their production, they can agree in principle that yes, we would cut the production, we'll meet the production quota, but when it comes to the practicality of it, these countries really rely on their oil. We know what's happening to our exchange rate. That is the critical source of our revenue when it comes to FX. So we can agree in the meeting that we'll cut our production, but in the reality, we cannot afford to cut our production. So OPEC is getting to realize that as they continue to extend the production cut, continue to put pressure on increase the production cut, some member countries will by default be laggards, and it becomes unsustainable. People like Saudi Arabia are already complaining that they have to overcompensate when it comes to production costs to meet up for the laggards member country. And when it comes to Goldman Sachs, should I say, output into 2021, I actually do agree with them. When it comes based on the inflation variable, we're looking to see going into 2021, and we expect that the US dollar will continue to be under pressure, and that in itself gives that demand bolster when it comes to commodities. You're looking at the precious metals, for example, gold and silver trading at significant levels. We expect that to continue to push up. We're expecting significant price appreciation in precious metals, and also when it comes to raw materials, too, when it comes to commodities. So I think yes, in some way and form, I get to agree that we are looking at a bullish run into commodities going into 2021.
Thank you. Let's squeeze in the North African story. I want Ali to also speak about Libya oil ramping up very rapidly, and it's becoming a source of concern here for OPEC Plus members. But I love McDonald's. Each time I have an opportunity, we don't have the brand here in Nigeria, but it looks like the Egyptians are going to get a whole lot more big burger, beef burger, vegetarian, veg burger, whatever, in more across Egypt. Ali, this is 200 million additional Egyptian pounds. It looks like Egypt has a way of attracting not just oil investment, energy, gas, whatever, but even bigger burger, as it were.
Absolutely. I think, we've discussed this before. It's a very attractive market, more than 100 million people. Like you said, it's one of the most attractive markets for these big multinationals. I think that's a major statement of intent by McDonald's. They unfortunately haven't come here. We've had Burger King. We haven't had McDonald's though. So this is, I think, their first real toehold onto the continent. Two other stories. Algeria, I saw this morning, are asking possibly for help from the IMF, budgetary support. I think this is the first time that I can recall for a very, very long time. And then, as you said, the Libya story is beginning to gain traction. It was only a few weeks ago that they turned the tax on again, but we're now looking at between 500,000 barrels per day. And I saw some bullish reports by some Libyan fellows on the ground who said, look, we could hit 1 million by year end. And of course, that supply needs to be accommodated into the global market, which will add a little bit of pressure, given that we're now in this big surge in cases and infections. And I would have thought that will temper down the air travel rebound in particular.
Okay, a quick one. Ejima, give us about 30 seconds, your outlook on Nigerian market for next week.
Yeah, okay. I mean, we've seen a very topsy-turvy market this week. Things have been mixed, and the second wave of the COVID vaccine, things happening in the fixed income market, and now the developments in the process have all likely been driving the market. But I think you would agree with me that over the past few days, it's largely been the protest. Things have not things have definitely not calmed down on that front, and investors will still be watching. That. I still expect a largely tepid market. Not much activity, and what little activity we see would probably be skewed towards the sell side for today. But there's still hope for next week, and investors will probably be watching developments over the weekend, before making their minds up on how to participate in the market for next week.
Yes, thank you so much. When we come back next week is going to be the final trading week in October. Airtel Africa reported about 20% uptick in its operating profit for the period ended September. That's one good news, one big story I'm sure analysts will be looking to. Next week we'll hear from Seplat as well, the EMP on the Nigerian bourse, and I'm sure there's a whole lot more as we wrap up the month of October next week. Thank you so much, everyone. Uche Naminis from BlueFX Nigeria, Onyeka Ijoma, thank you so much, from Vetiva Capital, and Orelu Adetunde from Greenwich Merchant Bank, and finally from Nairobi. Thank you so much, Ali Kansachu, CEO and founder at Reach Frontiers Management. Have a great weekend, everyone. Stay safe and see you next week. Bye for now.